On June 27, 2025, the crypto market got slammed from all sides. Ripple's lawsuit took a nasty turn, inflation crushed hopes of a Fed pivot, and over $150 million in leveraged trades were liquidated in just one day. This isn't just noise, it's a full-blown crypto storm. Welcome back, crypto warriors, to TJ Crypto World, your #1 destination for fearless market breakdowns, real-time insights, and no-fluff updates on everything shaping the digital asset space. I'm TJ, and today we're cutting through the chaos to break down exactly why the market tumbled, what these macro signals mean, and what you need to know to protect your portfolio, and even spot some rare opportunities in the mess. Don't go anywhere, because later in the video, I'll share the key levels and catalysts that could flip this trend and signal a market recovery. And if you're passionate about crypto clarity in uncertain times, make sure to smash that like button, subscribe to TJ Crypto World, and drop your thoughts below. What's your biggest concern right now? Inflation, regulation, or liquidations? Let's dive in. Market snapshot, June 27, 2025. Let's start with the numbers. Global crypto market cap slipped by 0.16% to $3.39 trillion. Trading volume dropped sharply by over 6% to $96.3 billion. Sentiment? Shaky. And here's why. We're not seeing a single isolated trigger. Instead, a storm of 4 powerful forces are hitting the crypto market simultaneously, each one fueling the next. Let's break them down. 1. Ripple's legal blow, XRP sells off. The biggest headline came out of the courtroom. A U.S. federal judge rejected a joint motion from Ripple and the SEC that sought to reduce Ripple's $125 million penalty and lift restrictions on institutional XRP sales. This setback crushed hopes for a clean settlement, and more importantly, it rekindled fears that regulatory battles in the U.S. are far from over. In just 24 hours after the decision, XRP dropped 1.17%, trading around $2.09. Trading volume surged 7%, hitting $2.94 billion, mostly from sellers exiting. The message? Investors want clarity, and they're not getting it. 2. Inflation spike, the Fed pivot gets pushed. The second punch came from Washington, where fresh U.S. inflation data lit up alarms. The core PCE, the Fed's preferred inflation gauge, came in at 2.7% year-over-year for May. That's hotter than the 2.6% forecast, and the highest since February. On a month-over-month basis, inflation rose 0.2%, again, more than expected. This crushes the idea that the Federal Reserve might cut interest rates soon. KPMG strategist Linda Howell summed it up: sticky inflation is now the Fed's #1 concern. That means we're in for longer periods of high interest rates. For crypto investors, that's bad news. Why? Higher rates equals tighter liquidity equals lower appetite for risk assets. Especially volatile ones like Bitcoin, Ethereum, or newer altcoins. 3. Liquidation wave, $153 million wiped out, and then came the flood. Over 68,000 traders were liquidated in the past 24 hours, with total losses topping $153 million, according to CoinGlass. The biggest single wipeout? A $2.82 million ETH/USDT position on Binance. What caused the cascade? It's the classic domino effect: legal fears spike. Prices dip. Leveraged traders get caught off guard. Margin calls force liquidations. Prices dip even further, triggering more liquidations. This feedback loop accelerates volatility and drains retail confidence. As Marcus Lee from Alpha Insights put it, we're seeing a clear washout of leveraged positions. Until that clears, stability remains out of reach. MicroStrategy, the software giant with billions in BTC, is now facing class action lawsuits from at least 5 law firms. The claim? Misleading investors about the risks of their aggressive Bitcoin accumulation strategy. Let's be clear, MicroStrategy holds roughly $6 billion in unrealized losses. That's a major risk exposure. While lawsuits are common in corporate America, the optics here are rough. They suggest to other CEOs, tread carefully when diving into crypto. According to Clara Benson, a legal analyst at Hogan & Hartson, MicroStrategy's legal issues may discourage other firms from adopting similar crypto exposure models. Translation: institutional momentum may stall, at least until the legal dust settles. If you've made it this far, you're clearly here for real insights, not crypto hype. Make sure you hit that like button, subscribe to TJ Crypto World, and turn on notifications so you don't miss our next deep dive on market recovery signals and altcoin strength zones. Combined impact, a perfect storm for crypto. So what happens when you combine Ripple's courtroom drama, hot inflation, a leveraged trader washout, and MicroStrategy's legal entanglements? You get exactly what we're seeing now, a market under pressure from every angle. It's not a time for panic. But it is a time to think smart. What's next for investors? In the short term, expect more turbulence. Markets will remain hypersensitive to upcoming inflation reports, Ripple's legal updates, Fed interest rate commentary, corporate crypto news. But in the medium term, here's what to watch: stability in regulatory frameworks. If Ripple can reach clarity, or the SEC softens its stance, altcoins could rebound. Signs of cooling inflation. A surprise dip could reintroduce hopes for a rate cut, pumping fresh liquidity into risk assets. Deleverage incomplete. Once the liquidation storm clears, we often see sharp rebounds. For long-term investors, this may be an accumulation zone. Why? Prices are down, but fundamentals haven't changed. Blockchain tech is advancing. Real-world adoption is growing. And big institutions are still lurking, waiting for the smoke to clear. Your strategy includes risk management. So there you have it. June 27th wasn't just a dip. It was a warning shot. A moment where legal systems, inflation, leverage, and corporate exposure collided in the crypto space. The future? Still bright, but the path forward will be bumpy. Don't just watch from the sidelines, get involved. Do your research. Manage your leverage. Stay informed. And hey, if you found this deep dive valuable, let me know by smashing that like button, subscribing to TJ Crypto World, and checking out my next video right here, where we break down which altcoins are quietly gaining momentum while the market shakes out. Until then, stay sharp, stay ethical, and stay one step ahead in the crypto world. This is TJ, signing off. Catch you in the next one.